Welcome back. Well, quite a bit of pressure. It's that 3 p.m. move which was coming into the markets, but a bit of a recovery, a smidge of that from the lowest point of the trading session, and quite surprising because the global markets are absolutely doing okay. If you look at the European market, the French CAC is actually up a good 1.25%. The future rates coming in from Nasdaq suggest a rally of 1%. The S&P futures as well as Dow there for you on the screen. So everything globally looks okay, but we are falling in isolation, at least as of today's concern. But what's happening outside is that the rain god has also been too kind on Mumbai as well at this point of time. Heavy downpour is what we have seen since the start of the day itself. Red alert was issued and I think that's having an impact. In the meantime, it's raining earnings as well for us. So after just decoding what happened to Laurus Labs, you have numbers coming in for ACC as well. The profit at the first look has come in at 464 levels. Let's do one thing because the stock is reacting a bit positively. Let's wait back for more details on that one. Because as far as ACC is concerned, overall the earnings from Shree Cement wasn't that great. It wasn't bad either. It was in line with expectations, and Ultratech too was pretty much okay. But
464, Anisha, as per our poll, is a big beat because we were in any case anticipating a 44% uptake. 328 is the PAT figure that we were working with. So at 464 crore rupees, this is a big beat. And I think that explains the spike that you're seeing on ACC right now. But anyway, we are awaiting more numbers. So let's see, what their sales volume is, what kind of realizations they are hoping to clock in. Because actually for the cement realizations, we're expecting a dip of about 3% over there. So let's wait by and see. This is a monsoon quarter, delayed as it may be. But typically you would not really have as much volume growth as well, even though we're expecting a 6% mark. So let's wait by and see what those figures are like, because this is definitely a big beat, at least on the PAT, and that's, all the number that we have. We're awaiting more numbers there.
Yeah, in terms of the revenue, however, it's coming at 5,000 odd crores. So it's decent growth coming in on a year-on-year basis. Of course, a bit of a beat coming in versus our expectation, 5,200 odd crores. I'm just going through the press release to see if there is any more internal in terms of the realization of the volumes that they have given. Yes, so the volume growth is something that they're talking about. It's actually coming at 23% on a year-on-year basis, 9.4 million tons. Is the volume
big beat?
I'm just gonna double check that number if I have it right, because that's what they are saying in their release. It says volume increased by 23.2% year on year at 9.4% at 9.4 million ton. So if that's the case,
a big beat because the sales volume, I mean, at least I'm just looking at our poll, and if you look at the industry average as well, at the max it could have been 8%, 6% is what we were penciling in for ACC. A double-digit volume growth in its 20s, that's a big beat, 23% if that's what they've managed to clock. And even the sales, 4632 is what our poll was penciling in, and the revenue as well is a big beat for ACC at 5,200. That's a beat on all counts coming in from ACC.
Yeah, even sequentially, because 9.4 compares with 8.5 million ton that the company reported in the last quarter, and last year this number was 7.6. So there's quite a bit of beat coming in there. The net revenue at 5,200 crores, margin has come in at 16.3 versus 12.3 in the sequential quarter, and 10.7 that was their last year. So I think it's a top line which has been very strong, driven by high volumes. That has meant that the operational leverage has kicked in. The margins is better than expectation, and that's the reason your profitability has come in above 400 crores versus the expectation of 200 crores. Quickly reading through what the management has to say as well. Mr. Ajay Kapoor, who is the CEO, is saying that they're delighted with the earnings as well, and they're saying that the growth was driven by robust demand for high quality cement products. And that, I guess, is the reason why we are seeing the improvement in margins as well. In terms of the outlook, they say the industry is in a positive cycle of demand as well as cost factors. This is coming at the most appropriate time when the company is under transformation phase, supported by synergies with the group, and we expect the positive trend of industry to continue in the coming quarter. So overall, for now, the first set of numbers that we have on ACC goes as a thumbs up. Of course, the street might be penciling in lower expectations, and that's why we are seeing a bit of a reaction of 1 to 1.5, a bit of a recovery coming in for ACC. But Devang, just wanted your sense regarding the entire cement pack and the initial sense on ACC.
Thanks for having me on the show. Yes, in fact, very happy to see good cement numbers. This is one sector which we have been bullish on, be it capital goods, be it infra, be it cement or building materials. Most of these companies are coming up with a decent set of numbers. And in fact, Ultratech also came up with good set of numbers. Looking at the numbers prima facie for SEC, looks like a huge beat in terms of profitability, in terms of revenues, in terms of volume growth, in terms of realization. I think, yes, need to go through the fine print, but this clearly shows that there is a robust demand scenario across the industry. There is going to be a lot of capex which is going to happen in the private sector, building demand, housing demand, refurbishment. I think a lot of such demands are right now causing sort of a Goldilocks type of a scenario for cement, which normally has a sort of a shallow cyclicality. But I think it seems like a very, very good sector to be in for the next at least couple of years.
Right, okay, that's that on ACC. Of course, a big beat on all counts, and I think the stock as well is reflecting that pretty much. Just want to, see what else is happening in the market. And RVNL, we haven't really talked about that, considering the OFS got announced. It's at a floor price of 119. 126 is the CMP for that one, and given the floor price for the OFS, we could see some more adjustment come by there. But Devang, just wanted your opinion on the RVNL OFS. I mean, it's an interesting bunch which you're now seeing OFS, if indeed there is a trend over here or not, because it's actually some of these railway and defense players where you've actually seen the maximum amount of wealth as well getting generated in the last 1 year or so.
Aisha, in fact, that's right. After a long time, you're seeing a broad-based rally, right? So from railways to defense to even stocks related to SEBs, the funding companies like REC, PFC, all this are coming up with not only good set of numbers, but in fact, the times are such that most of the opportunities for these companies are also sort of opening up for railways, be it Vande Bharat, metro, mono, infrastructure creation. I think it's a good time for all these allied sectors which had underperformed for the half of last decade. Most of these companies will do good. As I say, capex, credit growth, all this are leading towards some good numbers. So yes, no particular view on RVNL, but yes, most of these companies are going through a sort of a dream earnings period as well as a revenue visibility period.
That's a take coming in on RVNL. Let's take stock of what else is happening in the market. But apart from market, as we were talking about, it's also monsoons that we are tracking. If we can, let's go across to my colleague who's joining us. Shweta will talk to us about how the rains are in Mumbai right now, whether that red alert and that entire fear of heavy downpour is behind us. Shweta, what's the situation on the ground?
Well, absolutely. Let me quickly give you a gist of the, rain fury, what's happening in the capital, financial capital, I beg your pardon. But to start off with, I'm here at South Mumbai. This is near BMC, and talking about the waterlogging areas. Now, there are several key parts of Mumbai which are completely submerged in water. To begin with, it's the marine lines, from where we got an exclusive report for our viewers. It's been seen that low-lying areas, especially Dadar, Hinmata, King Circle, Sion, are the places where it gets usually inundated, but this is the time the time where 3 days more to come, where extremely heavy rainfall is expected for Mumbai and adjoining areas. Places which are considered to be posh like Churchgate, marine lines, these places have also been completely submerged in water. Now talking about the IMD predictions for next 3 days, IMD has predicted that orange to red alert, the conversion will take place as they record their rainfall. Already we have seen on 26th of July 2023 was the wettest July. The record was broken on the year 2020. Where we are speaking about the commuters, the traffic congestion, the kind of woes they have been facing through. We have seen that how Shrishti was reporting over the pothole menace. I was reporting on the waterlogging situation, how commuters are facing huge difficulties, and Andheri subways again one of the places where Ankit was also reporting from. So completely to give you a gist of what overall Mumbai has been going through, it's been seen that the city has come to a standstill.
Yep, just hoping that it's not completely rained out, at least on our way back home. 1% lower for the equity markets, the drag, and there as well continues, 19,600 thereabouts for the Nifty futures. Important to see what the US equity market futures as well are up to, because the big move is actually in the Nasdaq this afternoon. 1.25% is the suggestive future rate that you're currently seeing. Let's see whether that rubs off on our technology names or not. Traditionally or typically, sometimes it does by fluke. Let's only hope that's the case tomorrow morning too, if and when the Nasdaq, when it opens for trade, does have that same rub off from the futures. But for our markets, it's pretty much the same story. We're pretty much closing around the session lows. No meaningful recovery in an M&M. In fact, it's still down about 6%. TechM still down. Tata Consumer, Nestle, Britannia, ITC. Reliance as well continues to languish. Just pegged around the 2,500 mark, or a little below that actually. HDFC Bank, Axis, Kotak, IndusInd Bank, they're all down and out in trade. Devang, considering yesterday we heard from Axis Bank and it wasn't much of an impressive performance, the NIM's lowest in about 3 quarters at around 4% or so. The operating profit as well saw a decline sequentially for a second straight quarter. Wanted to understand what's your pecking order now between, when it comes to these large private banking names?
I think most of these banks have delivered a decent set of numbers. Of course, NIMs had sort of peaked out for a lot of such banks, and I think the street was factoring in that sort of estimates earlier as well. Yes, in terms of pecking order, of course, we like the large behemoth now, HDFC Bank. I think after consolidation with HDFC, or rather merger with HDFC, of course, the economies of scale come to the picture, and then no one can sort of ignore the strength and the large size and the scale it brings to the table. So I think, yes, one, HDFC Bank, and second, of course, ICICI Bank, excellent set of numbers, again, expansion in ROEs, good profitability. And over the last couple of years, it's shown that how the ROEs and ROAs can probably change as the management changes. And I think exactly it's the narrative which has played out, which a lot of people were sort of factoring in. So I think HDFC Bank, ICICI Bank, and of course, then there are a host of certain PSU banks also which are showing good turnaround. But probably private banks is where I think still there is a lot of conviction left on the table as India grows and the economic growth rubs off on the banking sector and the credit growth as well.
So that's a take coming in as far as some of the private banking names are concerned. But Devang, what's your view regarding the kind of reactions that we are seeing on M&M as well as Canfin Homes? So Canfin Homes, of course, the fraud is to the tune of 38 crore rupees, but the stock has been seen dropping over the last 3 trading sessions, a lot lost in market cap versus the fraud amount. And similarly for M&M, it's just a 400-500 crore investment that they have made in RBL, but the market capital has eroded by almost 15,000 crore over the last couple of days.
Obviously, with the fast and furious rally that market has sort of encountered in the last couple of months, and there is very little sort of, I can say, margin of error for such companies. And in fact, as we know, M&M has sort of a dream business or dream capital allocation that it has done over the last couple of years, and all the businesses are firing on all the cylinders, including the XUV and then the SUV range of cars which it sort of manufactures. I think it's sort of got an extremely investor's delight to win the portfolio. The amount, exactly what you said, is an extremely small amount. But yes, market has its own set of questions in terms of capital allocation policy and non-allied business. I think the management coming out and talking openly about it would soothe the nerves for a lot of investors. As I say, the business is superb. Yes, probably it's done a little more exaggeration in terms of price behavior.
Also, given the kind of reportage that we've had from both DRL as well as Cipla, higher than the previous quarter's guidance as well, visibility is extremely strong as per the management commentary as well, Devang. What are you making of this fresh revival within the pharma pack?
In fact, pharma has come out of a huge sort of a hibernation. The last couple of years were difficult. I think the COVID year was the year when pharma did extremely well, right from the US generic companies to even companies in the path lab segments. Most of these companies did well, or be it CRAMS. I think it's an extremely positive surprise to see Cipla sort of not only beating in terms of profitability, in terms of expansion of margins, and also guiding margin strength as well. Even Dr. Reddy is registering 72% sort of growth in the US market, and also positive visibility about India business for the next year, and very positive commentary augurs very well. Pharma has been one sector which sort of was a dark horse, and we like the sector quite well. And I think from here on also, it's probably going on from strength to strength as it has come out of a long wave of underperformance. Even companies like Syngene, which has come up with good set of numbers. So there is a good mix of companies which have come up with a good set of numbers. And I think also, most importantly, though the numbers are sort of, again, we can say is a rare view, but the windshield, the guidance is quite strong for most of these companies.
Right, okay. Time to get in some BTST trades as well going on that note. Naresh, what's on your list?
So first is a buy on DCB Bank. The stock is giving a short-term range breakout. Stop loss at 127, target price of 135. Second is a buy on BEL, which is trying to get close to a flag breakout above 129 levels. Preempting it, stop loss at 127, target of 132.
What about you, Kunal? What's the BDSC trade?
Well, I'll go with two sell calls, conditional sells. The first one is a sell on Berger Paints. The stock showing slight signs of weakness, so sell below 670, targets of 660 for stop loss of 682. And the second will be a sell on MGL, Mahanagar Gas. The stock showing signs of weakness after yesterday's candlestick price action. So both suggest a sell 1060 as a target and stop loss at 1100.
Okay, lots to digest today, and I guess tomorrow as well will be a full day, start of a brand new series. Anisha, what else is going to be on our radar?
Well, overnight, I think we'll get the decision from ECB as well. So after US Fed, that's going to be in spotlight in the US initial jobless claims data as well as GDP. So that's important to track. For now, the US markets is going full gear into that particular event. Let's see whether it holds up or not. But earnings, thankfully, there are no Nifty earnings, but a lot of large ones that we need to track, right from an M&M Financial, Exide, United Breweries, Motherson Sumi Wiring, SBI Card, Indian Oil Corporation, Piramal Enterprises. So a lot really on our plates tomorrow. But the corporate action is that you need to track is Piramal Enterprises. Remember, on that buyback news, the stock had already seen a spike of 8 to 9% yesterday. The final announcement will come tomorrow, so keep that on your radar. RVNL, the OFS for the retail investors open today. Today, of course, it's open for non-retail. And then, of course, IPO action, wherein tomorrow will be the date when Yatharth Hospital's last day of subscription is there. But talking about IPO action, today we saw a fresh listing on the bourses. NetWeb Technologies had seen subscription of 90 times, has seen a stellar listing come in after that as well with a gain of 80 to 90% and continues to hold on to that. Devang, have you tracked this one? And if somebody has got the allotment, should they book profits? And if somebody hasn't, should they look at buying afresh?
Talking about?
NetWeb Technologies, the stock that listed today, if you track it.
Sorry.
Okay, no worries. Let's do one thing. Let's listen into the management as to what they have to say about the outlook, because they sounded fairly confident, even though the order book right now is 90 crores, but the growth prospects is quite strong. Listen it.
Yeah, actually order book is basically one aspect of it, but basically order book is definitely good, and currently the order book is also looking very bright. And plus the most important thing in our situation is the pipeline. The pipeline is very robust actually. That shows us that basically we will show a good amount of growth. Almost all we will maintain our growth, what we are trying to do. And so I think that gives me the confidence, that my pipeline gives me the confidence that basically I will be able to grow very well.
Okay, let's just see if there is any other trend which is emerging right now in trade. And we've got M&M which is slid actually more than 6% on the futures. Idea down about 4%. TechM hasn't seen any recovery, and the Nifty as well is going home pretty much at the lowest point in the day. 19,659 is where we're shutting shop, and that's a good crack of about almost 115 points in the futures, 77 points lower, although we've scaled back to 19,700 on the spot. Kunal, you were talking about as to how today's move is a definitive one, and you are seeing now lower lows and lower highs being maintained. What levels are you now looking out for next?
So that was the threshold of the benchmark. We went through below that zone. I think 19,600 was the low the index has made. But then I think on closing basis in the last half an hour, we've seen a good 100-point recovery for the index. So hopefully that support of 19,650 remains. I think that's the litmus zone for the index. So if we don't break below that 19,650 mark, we can probably expect that the pattern of lower highs and lower lows may not be completed. But if we manage to do it, say in the next in a couple of days, then I would believe that we could probably be at the cusp of a bit of a trend reversal for the index.
But what do you make of the rollover data, etc.? Because it's been a very strong month in terms of the series. We have seen a gain of almost 3.7%. And if I have it right, the rollovers are also quite healthy at 70% thereabouts.
So I think the last I had looked at the rollovers, in the mid session today was around 68% for the index from 65% yesterday, and slight increase in bank. In fact, good increase in the bank Nifty in terms of rollovers, which we seen today. I have not seen the stock specific rollovers. So that generally indicates that maybe the market mixture is going with a much more healthier texture. The standout point for the series this time around is 140 points premium for the August series. That's one of the, I think if I'm not wrong, it's one of the highest premiums we've seen in the last 6 or 7 months of this calendar year so far.
And that means that would indicate the bullishness and the excitement that the market still has on the upside, right? Yeah. Interesting. But for the trade today, we're just closing down. So thank you, Devang, Kunal, as well as Naresh for joining us. But it's a tepid close, much better than what we were at one point of time. We have at least managed to hold on to 19,700 at the closing level. The Sensex is down about 0.4%. Advanced decline has improved, but Aisha, it was Pharma that was clearly the star today.
So Cipla is going home with a 10% gain. You've got Sun Pharma as well, which closes in with a 2% move. Divi's Labs, DRL, Apollo Hospitals, Ancillaries, they're all holding out very, very smartly. Even Syngene, which perked up a good 6.25% in trade. The other movers, of course, Colgate reacting to its earnings in the commentary, almost a 7% dash. You've got Birla Soft reacting to its numbers, a 6% move there. REC, which held out by nearly about 9% in trade. So see, these are some of the blowout winners from within the liquid universe. Have to talk about the pressure points as well. Besides M&M, there's also been Intellect, which lost about 4%, HPCL, TechM down about 3.5%, Tata Consumer down again almost 3.5% or so. Nestle, Britannia, Adani Enterprises, Axis Bank and Reliance, they've all been ranked underperformers. But on that note, we're going to wind it up right here on this edition of Closing.